Good afternoon, everybody. Welcome to the 5 series. My name is Fiona Dillion and I'm a private client partner at Gunnercooke. I'm going to be talking to you today as part of our 5 series about 5 essential succession planning steps for every business owner. I thought this was a good topic to cover, as many business owners become so wrapped up in running the business they forget to look after their personal planning. I also thought it would be helpful to give you a brief overview of 5 topics every business owner should consider in their succession planning. So today we're going to have a look at business property relief, how to get it and keep it, lifetime gifts of business property qualifying for relief, whether you should consider making them or not, wills, how not to leave your business assets in your will, and trusts, how to leave your business assets in your will and utilise a trust, saving inheritance tax. And finally, we're going to have a look at commercial lasting powers of attorney. So first of all, we're going to look at what is business property relief. Business property relief is a really valuable succession planning tool that can reduce any inheritance tax payable on transfers of relevant business property. Relief is available at 100 or 50% depending on the type of property transferred. So what this actually means is, if you have a qualifying business that's say valued at £1 million, you could save £400,000 inheritance tax if it qualifies for business property relief. So first we have to look at, does it actually qualify? To qualify, it has to be a relevant business property. So assets qualifying for 100% business property relief are shares in an unlisted company, a sole trader business or share in a partnership, and shares listed on the alternative investment market, which is known as AIM. So that might be someone like Majestic Wines, Domino's Pizza. Assets qualifying for 50% business property relief are shares in a quoted trading company in which the individual has voting control, and also land, buildings or plant and machinery owned by the individual and used in their partnership or company that they have control of. And business property relief is also available at either 50% for quoted or 100% for unquoted on loan notes and debentures in a company, again in which the individual has voting control. So then we've got to look at, one, is it relevant business property? And if it is, then does it satisfy the qualifying period? So you can only get business property relief if you've owned the business property or asset for at least 2 years before the date of your death or the date of the gift if you gift it in your lifetime. Another factor is the business must be wholly or mainly trading to qualify. So case law has established that mainly trading equates to at least 50% of the business and takes into account factors such as turnover, profits, and asset base. These are all considered individually, but then the business will be assessed as a whole. So basically, this means if a business which is considered to be a trading business also holds a property which it lets out, which could be residential or commercial, it can still qualify for business property relief if the letting part, so that's the non-trading element, is less than 50% of the whole business. The rules, as you can probably see, are quite complex, so it's really important to get specific advice from a specialist. Then we're going to just have a quick look at what doesn't qualify for business property relief. So you can't claim relief when the business mainly deals with securities, stocks or shares, land or buildings, or in making or holding investments. So a business that only generates investment income will not qualify. So this rules out residential or commercial property lettings, so any property portfolios will not be able to claim relief, a property dealing business and a serviced office business. So that's just to give you an idea of the sort of businesses that cannot qualify. There are, there are also some businesses that are classed as borderline. So this is where the revenue look at them on a case-by-case basis, and they look at the level of services provided. So these would look at furnished holiday lettings, property management, property development, so it has to have substantial letting and dealing, mixed estates of farming and letting, and caravan parks where there is letting, holidays and caravan sales. So what they actually look at is the extra services, are they significant in addition to the letting of the property? And it used to be furnished holiday lettings did get business property relief, but since 2013 it was declared that they didn't have extra services that were significant enough to qualify anymore. So it's again really important to keep up to date with what's happening, and it is an ever-changing landscape. Next, we're going to look at whether you should make gifts in your lifetime or through your will. So you can gift business property or assets during your lifetime, and your estate can still get business property relief, so long as the property or assets still qualify relief at the date of your death. So I'll just run through that with you because again, the actual relief is very complex and difficult to get. So the business relief will be available if business property or asset gifted was relevant business property at the time the gift was made, so that means it must be a trading business that qualifies. You'd owned it for at least 2 years before the date of the gift, and it has been owned by the recipient throughout the period from the date you gifted it to them to your death. And the final criteria is, at the date of your death, it remains property which is eligible for business relief. So it's got to be a trading business, you've got to have owned it for 2 years, the recipient has had to retain the asset until the date of your death, and it's got to still be eligible for relief. The recipient of the gift can replace the property or assets if they wish. So they could, for instance, replace machinery with something of equal value so long as it's used in the business. So basically, if you were to die in year 3 and the recipient still owned that business property that you had gifted, you would get full relief. For inheritance tax purposes, though, it's necessary as well to survive for 7 years from the date of the gift for it to be outside your estate. So if you don't survive the 7 years, the value of the gift is added back into your estate and inheritance tax would be payable, although this would be tapered. So is it a really good idea to make lifetime gifts? What do you have to watch out for? Well, you have to be really careful and consider that you may lose your entrepreneur's relief. And also, if the value of the gift has increased in value from the date that you bought it and the date that you gifted, then it will trigger capital gains tax. And even though you can hold this over until the assets are sold in the future, it could be seen as an unnecessary tax that's been triggered. Should you actually make the lifetime gifts? Well, that needs to be considered really carefully. It may well be better to allow the assets qualifying for business property relief to pass by your will, as they will be inheritance tax free and any capital gains tax is effectively wiped out. So we would really say, if you're considering making a lifetime gift, exercise extreme caution because you will be triggering capital gains tax, which you wouldn't if you left it via your will. So now we're going to have a look at how you should actually leave any shares qualifying for business property relief. So first of all, we're going to have a look at your will. And in this example, you can see the shares qualifying for business property relief are going to be passed outright to the spouse. So in this example, Tom owns shares in a company worth £1 million. Tom's will passes the shares outright to his wife Jerry on his death. The company is then sold for £1 million. So Jerry received the shares, the company is then sold, so she now has £1 million in her assets and her estate. Jerry dies and she hasn't spent any of the £1 million, so she's still holding them in her estate. So for inheritance tax purposes, the whole of the £1 million will be taxed at 40%. So inheritance tax due on Jerry's death will be £400,000. So what you've got here is a gift passing outright to Jerry, and we're looking at an estate over £650,000, which is the combined inheritance tax threshold. So this is an example. So if there was over £650,000 and the shareholding, the shares would be taxed at 40%. So there'd be quite a significant tax bill of £400,000. So what we're looking at today is, well, how can you actually stop paying that £400,000? So what we look at is utilising a trust, and all of this is what we'd class as non-aggressive tax planning. So HM Revenue and Customs are familiar with this and they're quite happy with it. So this time we're going to look at, well, what would happen if we actually used a trust rather than the will just passing it outright to Jerry? And you'll see a significant difference here. So the shares qualifying for business property relief this time pass into a discretionary trust. So Tom's shares worth £1 million drop into the discretionary trust. Once again, the company is sold for £1 million, but this time the £1 million falls into the discretionary trust and not into Jerry's estate. So on Jerry's death, the sale proceeds do not form part of her estate. The sale proceeds pass inheritance tax free to the children, so you can save £400,000 in inheritance tax. It's really flexible. The discretionary trust allows Jerry, as Tom's widow, to access all of the funds if required. So you're not putting the funds out of reach of Jerry. She is one of the beneficiaries. If Jerry requires the funds, the trustees could either distribute the funds outright to her or by loan. The use of the loan arrangement is useful in minimising inheritance tax on Jerry's estate, as the loan will be repayable to the trust on her death. So if Jerry wished to, say, extend her property and the trustees distributed £300,000 to her outright, she could use this on the property, but it would form part of her estate and be taxed at 40%. So you'd be increasing her inheritance tax bill by £120,000. Alternatively, if the trustees had just loaned the money to Jerry, it would be repayable to the trust on her death, and the £120,000 inheritance tax would be wiped out. So basically, if you loan money to Jerry, it's always going to come back in the trust, and as you can see from the slide, anything that's held in the trust will pass inheritance tax free to the children. So it's quite a simple mechanism to save an awful lot of money. And finally, we're going to have a look at commercial lasting powers of attorney. It's important to consider what would happen to your business if you became incapacitated by injury or illness. Lots of people do not have these in place, and it really is so important to consider it. Generally, there are two types of lasting powers of attorney. There's one for property and financial affairs, and this allows your attorney to make decisions when you've lost capacity, but also before with your permission, say you're on holiday or you were poorly. The property and financial affairs allows them to manage money, pay bills and sell property. There's also one for health and welfare, and this one is only able to be used when you've lost capacity. This one covers things like hospital treatment, awful things like resuscitation, care, where you would live, if you could not make those decisions for yourself. So first of all, you need to have a look at who you should choose to act as your attorneys. So it's really important to choose someone that you trust implicitly to make decisions in your best interests. I always say to clients that lasting powers of attorney are actually more important than your will, because you're alive and kicking and you're trusting someone to look after your affairs for you whilst you're still here. So you may choose family, friends or a professional. It is usual for the attorneys to be the same for the property and financial affairs and health and welfare, but it isn't necessary. I have had a few clients in the past say to me, someone who'd be really good at making financial decisions would be awful in the crisis at the hospital, whether I should be resuscitated or not. So it's one of those personal things that you may choose to have different people. Lots of people don't realise that you can actually appoint a separate commercial power of attorney for your business. So you can appoint a separate attorney. So you may have in place your lasting powers to deal with your personal property and financial affairs and your health and welfare. And then you could have a completely separate attorney to deal with your business. So you could choose someone to deal with this for you, and they could look after your business, whether you're a sole trader, partner or company director. We would recommend that you make a separate commercial lasting power of attorney for your business. It just makes sure everything is kept separately and it keeps it simple. The person being appointed as your attorney for the business should be someone that you trust, and if at all possible, be familiar with how your business runs and have the knowledge and skill to make suitable decisions for your business. There really isn't any point in appointing an attorney who hasn't got a clue. So sometimes people will come along and say, look, I've no family or friends that could do this. As lawyers, professionals, could you do it? And we'd always say, look, is there not someone in the business to do it? Because clearly, although we're lawyers, we don't have the necessary skills to run that business. So we do try and encourage people to appoint people that actually understand your business and would make the same decisions that you would. What could your attorney actually do? Well, they could deal with fundamental business decisions. So they could have access to business bank accounts, pay suppliers, employees, insurance premiums, and ensure contracts are not lost or compromised. It's really important to consider this because without a business attorney, the lack of ability to make decisions could cause significant disruption to a business very quickly. If you just couldn't pay a supplier and that supply chain was one of your key ones, it could have a devastating effect. These come into their own. I remember a few years ago, I had a client who was in Iceland when there was the volcanic ash issue, and he was over there and he just couldn't get back home, and he didn't have a power of attorney in place, and he had significant issues with his business being run whilst he was away, and it was all down to he had some contracts that needed to be signed with regard to some supply chain and also some contracts for new employees. And basically he lost one of his employees and lost one of his contracts because he couldn't fulfill it. So as soon as he got back, the first thing he did was put in place a commercial lasting power of attorney. Having been bitten once, he clearly didn't want it to happen again. When you're considering making the lasting power of attorney, it is actually really important to review any company articles of association, partnership agreements or shareholder agreements as part of the process. You need to have a look at these just to make sure that the commercial lasting power of attorney is compatible and also is available to be used. Once you've made a commercial lasting power of attorney, it has to be registered at the Office of Public Guardian before it can be used. So as soon as it's used, your attorney could start making decisions on your behalf. So this could be whilst you're on holiday and you may have something going through that you need someone to sign some paperwork for you whilst you're away, or it could be you recuperating after an operation. Lastly, we're going to have a look at what happens if you don't have a commercial lasting power of attorney. If you don't actually have one and decisions need to be made, it may be necessary for an application to be made to the Court of Protection. And this is for an order appointing a deputy. A deputy is really the same as an attorney. It's just a different process. It can be really expensive. Fees normally are around £2,000 plus VAT. And the court fee is £400. It also requires an insurance bond to be put in place. Takes 4 to 5 months to obtain, so during that 4 to 5 month period nothing can happen anyway. And the deputy has to provide annual accounts to the court showing all monies received and paid out and full receipts. So it's actually really onerous. The biggest thing to take away from this is if you don't have a commercial lasting power of attorney and something needs to be done, it can't, because it takes 4 to 5 months just to get the order through to be able to actually start doing anything. So our view is that every business owner should have a commercial lasting power of attorney in place as part of an effective business continuity plan. So it should be part and parcel of your succession planning. So that concludes today's presentation on our 5 essential succession planning steps for every business owner. In summary, check if your business qualifies for business property relief. If it does, make sure you preserve it. So realistically, you need to speak to a legal professional or your accountant to get a view as to whether you qualify for the relief. Consider whether you should make a lifetime gift of business property, but as we said, watch out for the loss of entrepreneurs relief and triggering capital gains tax unnecessarily. Make a will, but don't leave assets qualifying for business property relief outright to your spouse or your family. And use a discretionary trust to pass your wealth down the generations. And lastly, make a commercial lasting power of attorney as part of your business continuity plan. We think that if you look at all of these areas, you will have done the planning that is necessary to make sure that you pass your business on successfully. And it's really, really important because, as we said at the beginning, you are so wrapped up in your business, you don't have time to do everything. But if you could just set aside a little bit of time to have really a personal succession planning health check, it would really help you, and it would make sure that you don't leave your families facing uncertainty and any difficulties. So we do have a PDF to circulate to anyone who is interested. And this outlines what we have discussed today. And if you would like that, please contact our marketing team, who I'm sure will be happy to supply that to you. I'm going to stay online for a little bit longer, and if anybody has any questions, if you'd like to put them to us, and we'll do our best to answer them for you. So there's a question that's come in, and it says, will the trust you have mentioned for the shares be in a will, or is it separate? So it can be in either. The discretionary trust that can be created in the will can also be set up in your lifetime, and it doesn't matter really which way round you do it. It's exactly the same trust. If you did want to set one up in your lifetime, we call them pilot trusts, and you set them up with just the sum of £10, and they basically just sit there as a vessel to receive any money or shares that would go in the future. So you can do it either way, it doesn't really matter. The provisions for the trust are exactly the same in both of them. I hope that sufficiently answered that one. There's another question. Now this is an interesting one. Does the commercial lasting power allow a director to delegate his duties? Excuse me. The answer to that is no. Commercial lasting power mustn't be confused with a director wishing to delegate the duties. A director's appointment is a personal one, and his functions or her functions are as a board member and can only be discharged by them, so you can't actually appoint an attorney to do that. However, the director's powers and general duties may be able to be delegated if there are specific powers in the company rules or constitution. So, as we were saying before, when you're looking at the commercial lasting power of attorney, to check the articles or shareholders agreements, clearly you need to do that. But no, the commercial lasting power does not allow you to exercise director's duties. So we'll just see if any more questions come in. Okay, I think we have no further questions. If anybody listening to this live or after the webinar has any questions, please feel free to contact me by email. My email is on the presentation, but it's also fiona.dillion@gunnercooke.com, and I'd be happy to run through any of the matters raised in the presentation today with you. So I'd just like to say thank you very much for attending, and I hope that you found the webinar useful and informative. So thank you very much indeed for your time today.